Hey, welcome everybody to another eye opener. This is Smart Wealth Daily's quick little video chats that we do with top traders. And we've got Keith Harwood here. Keith, great to see you, my man. Great to have you here. Really excited. Uh, I feel like I'm on a roller coaster here. I mean, we get all jacked up last week about Powell and Jackson Hole and rates possibly being cut, and everybody just emotionally reacts on Friday, shoots this market, you know, up through the roof, right? And then Monday I wake up and I'm thinking, all right, here we go, let's keep going. And it just, wow, just like, eh, not so excited. It's like we're ADHD here as traders, and we need something super exciting every single day. Monday
Yep.
you wake up and they're already talking about, well, we're going to wait for Nvidia, and like, what the heck? How do you trade this stuff? That's the big question. And how do you trade it without getting crushed? And that's what I'm looking for. So interested in what you're looking at today. Glad you're here with us because I know I really value the perspective you bring to the table, my man. So thank you.
Absolutely. Yeah, no, I think you kind of nailed it right on the head there. I mean, the general idea here for me was, okay, so people started getting a little nervous about Powell. So we made the new all-time high a week and a half ago, almost 2 weeks ago. And then we drifted down for a week. And then Powell spoke and confirmed that interest rate cuts in September look like a probable scenario. And so we went right back to where we
Maybe
were a
might
week
be.
ago.
Yeah.
So
Yeah.
literally just jumped from, drift down and then jump back and then say reprice back at the highs and then hang out. And then it's okay, now what are we waiting for? And that idea of now what are we waiting for seems to be getting ingrained in our brains. It's not an excuse to trade. People are looking for reasons not to trade because we're not doing much right now. We're drifting down. It's a lot of chop. And when you get chopped up, it can be painful. If you start to go for a directional move and then you get worried on dips and you get excited on rallies, naturally during that chop, you're kind of buying the highs, maybe starting to reduce on the lows and saying, gosh, you know what? I kind of want to set it and forget it and I'll wait for something to change. So that material change is what people were waiting for. I actually thought that Powell was enough, maybe that it was be that material change, but now we have another excuse. Let's wait and see what Nvidia does because other semiconductors had some weak earnings. And if other semiconductors had some weak earnings, then maybe it's not quite the time yet. So if Nvidia has positive earnings, is that enough to then say, okay, now we can forget about it again and go back to trading or bullish behavior or whatever else and stop this market shop that doesn't get people too excited? Um, Time will tell, right? Because once Nvidia
Yeah.
passes, next excuse, we've got non-farm payrolls coming up in just over a week. Wow, got to worry about that. Um, so, there's always a reason or always something to worry about. But if you always attribute that that thing is the make or break moment in the market, then you're never getting in. So, that's kind of the mentality I'm trying to take right now is understanding the risk of it, but not necessarily preventing myself from trading as a result. So it means, yeah, maybe I won't trade Nvidia. Maybe I won't trade Apple for that Nvidia earnings. Maybe I won't trade something within semiconductors because I'm worried about the risk of the correlations. But it doesn't mean I can't go to, an airline. We talked about Delta last week, or into the financials. Those shouldn't be as impacted by Nvidia earnings, and I can move forward based upon those sort of ideas. So that's kind of my big
Yeah.
picture element right now. Noting on the
Yeah.
S&P 500, we did touch a new high on Friday, but holding out right now. So I think right now the market's looking for who's going to buy us up to the new high. And, maybe it's Nvidia. Tech didn't bounce back quite as aggressively. So
Well,
tech
yeah,
had the same fall off, but didn't get back to those highs. So,
on the Nvidia thing, one of the things I read this morning I thought was like a key element that could uh, kind of poke a hole in it in the
mhm,
Nvidia bubble is this kind of impact of the tariffs
mhm.
and China restricting and then limiting and not limiting and exceptions and all this stuff. It just makes it questionable, and that's such a big part of Nvidia that it could come up in the earnings call. Even if earnings look great, they could be kind of, if they start to backpedal and caution everybody for what could come out
Yeah,
in the next earnings, what to expect in the next quarter.
yeah.
That could have a big impact on things as well. So, you
Well,
do get
and
the sense that the whole AI thing. I hate to use the B word, but it is a little bit of a bubble and it is up there. And we know what happens to bubbles, you know.
Yeah.
Until then, we got to keep grabbing money from it. But we don't want to be flat-footed when we do, it is officially a bubble and does what bubbles do.
Right. Well, in bubbles, naturally, there are elements, there are companies that basically are just shouldn't be up there, and then they go away, and then the stuff that was actually good comes back. Like the dot-com bubble was a bubble, but doesn't mean Amazon went bankrupt. It does
Right.
mean Value America, which I was proud owner of, did go bankrupt. So Value
Right.
America was the number two e-commerce site behind Amazon at the time, and they went bankrupt. Amazon survived. So, certain things go fine and others don't. And I think the same is going to be true for AI. There's AI names that aren't going to survive if and when the bubble pops because then they have a tough time raising capital and then they can't
Mhm.
generate a profit. And since you mentioned it, I mean, we can also look at Palantir over the last week. Palantir, I think, was a perfect illustration of what you were talking about. We made this high on August 12th at about $190 a share and then just fell off a cliff, hitting a low of 140, what was it, 142
Mhm.
last Thursday, or was it Wednesday? Either way, last Wednesday. So, that dropped almost $50 in the course of a little over a week. We're talking a
Mhm.
25, almost 30% drop in that little over a week while the market was having a little bit of risk off in preparation for Powell. But, there's some people out there that are starting to get a little concerned about tech. And I
You can
think
see it on the
NVIDIA is going
chart.
to make a break for
Look
that.
at it. It's right there. The charts are telling you what's going on.
Yeah.
That thing was just overbought to the, it's riding above the freaking the band there,
Everything.
.
Yeah, and
Yeah.
they had good earnings that caused this jump up on August 5th. And then now we've completely unwound that earnings move and start questioning, okay, well, how low can it go? And then when you start asking how low can it go, oftentimes that is the low because everybody's saying, oh God, this is gotten painful. But in this case, so far it's the low. We'll see. I mean, bad NVIDIA earnings,
Right.
maybe that triggers more selling in Palantir as the AI story starts to fade away.
Yeah,
But in any
exactly.
case, the one thing I also wanted to note here, though, for those that hadn't noticed, small caps actually were the big winner on Friday. So the money flow was not into tech, it was actually into small caps. They used that pullback and risk off prior to Powell and then rebuying after Powell as a rotation element. So out of tech and into small caps. I just think that's kind of an interesting rotational element here where small caps have tried to get started, but we're not even at the all-time highs in small caps. Tech, S&Ps right at those all-time highs. We were trading 245 back in November for IWM. So if I go back a year, you can see back in November, we are trading about 245 a share. The high was 244.98. So this still has some room to get back to November highs where everything else has been so bullish. And the question I think that's on a lot of people's minds is now the time for small caps, which some of the sectors tend to be like financials, healthcare, industrials. If those sort of sectors can now start to take some market leadership away from the AI theme of the last few years. So
Yeah.
um,
Great
yeah,
spot, man. I mean, the classic Keith Harwood here, looking at
yeah,
everything and seeing the laggard that has room to catch up. And it's just what you're great at. Just love it when you point these things out that,
yeah.
everybody's getting distracted, they got the magician telling them to look over there and they're missing what's actually going on. And you're really good at pointing that out.
Yeah, I mean, and I think the key here to me is along with this is the idea that if NVIDIA is not my style and I don't want to be exposed to NVIDIA earnings, I can avoid it. It doesn't mean I have to avoid all trades. It means I avoid NVIDIA, I avoid some tech, I avoid some AI names, and I look into something else that's moving, like small caps are starting to get going. We highlighted last week Delta Airlines, and it looked ready to continue after positive earnings. Unfortunately, it dipped with the rest of the market on that pullback and then jumped back up with the rest of the market on Friday. Now sitting, around unchanged from Wednesday's open last week. So at the end of the day, the Wednesday open was 59.85, now trading 60.41, so up small. Does look like it might have some room to go if I pull up my forecast toolbox. As you guys always know, I like to look at here. Let's pull that up real quick.
We don't want to see you. We just want to see the forecast
I
toolbox.
know.
That's what we're all here for, you know?
You want to see what the AI says is happening next, and it's
Give me a
showing that
peek.
there's this good potential for a little bit of a bump here. But the model is a little bit funky now. We've got a model grade of C, so it's a little bit lower confidence level. It's one of those trades where, for me, it goes back to my old adage of, is it a trade I want today? If I had no position, would I be buying Delta? And the answer for me is not really, probably not. So if
Would you
I can get
sell it
out of the
though?
position for a break even, then take off the position. Didn't lose money, didn't make money, but it's not the best trade today. So
Take
why
it,
bother?
put
You know?
put that money somewhere where there's a little bit more juice,
Yeah,
you know what, why leave it sit for a week flat,
yeah,
pull out, no skin in the game, no loss there, no harm, no foul, right? And then
yeah.
you jump into something that's got a little more chance of moving.
Exactly, something with a little bit more intrigue to it. So actually, one of the things that I was doing this morning was going through that forecast toolbox. I went over to the company screener, which helps me find some of these ideas. And one of the ones that showed up on there that I thought was kind of interesting because I don't normally see it too frequently, and I frankly don't look at it that much. But Comcast actually has a really interesting looking model. So high probability with a model grade of A, positive trend. And it's nothing like too crazy in terms of the rally here. We're talking about a move from currently around 34 up to about 36, maybe a little higher, 6-7% over the next 2 weeks. Well, that can actually work really well in a stock like Comcast. It's a low volatility stock. So when I pull up Comcast here, just to give you guys some perspective, the normal daily move is about 1.5%. And it's actually down a little bit to this morning since we just opened. But the projected target is right around this previous high at 36 bucks. So if this bounce back that it's been achieving here over the last few weeks gets a little bit more follow through, which seems likely as long as we don't get too much more of a break today, it could be an interesting setup where the October 35 calls 60 cents. So if we go to 36, they have to be worth at least $1, and they'd be worth more because there's still some premium out there. For a little proxy, I can look at the 32.5 calls. Those are $1 in the money. Those are worth $1.85, maybe a little bit more. So if I can have this go from 60 cents to $1.85 or $1.90, I'm looking at tripling my money in that scenario that's being modeled out with a high level of confidence for the AI. And now I will always say, just because it has confidence doesn't mean it's going to happen every time. We may be talking about something where it's got, for that kind of expected return, a 50-50 shot. So 50% chance I can triple my money and 50% chance I lose my money. If I'm looking for a smaller gain, I'm going to increase my probability of success. But if I want to go for that big move and play for 36 bucks, I think this has got a setup that's got positive expected value and looks exciting to me for one of those plays that could really, add to my returns and at a high enough probability that it makes a lot of sense. Because I don't want to do a bunch of like 1% trades. This is like a coin flip kind of trade, maybe a little bit better than a coin flip.
Yeah, and this goes back to what you were talking about with NVIDIA too.
Yeah.
You look at your portfolio, and first thing you look at your risk tolerance personally. Are you looking for an aggressive trade? You're looking for a more conservative trade. And within your own portfolio, you could have buckets that are allocated for each of those types of risk profiles. So find the trade that
Hmm.
fits what you're trying to do. If you have a little bit more risk capital that you're looking to allocate, you take the 50-50 trade. You take the NVIDIA and you see if you can ride that wave. But don't bet the farm, right? Keep the mortgage payment
Hmm.
safe and use that for the more conservative and look for, maybe somewhere in between those two buckets, you have the income generating stuff that's going to take
Yeah.
that targeting that smaller return. That's a smart way to trade. So many people jump into this stuff and they want to look for the big hits all the time and they're swinging for the
Yeah.
fences every time they're at the plate. And that's just not sustainable. You're gonna get hit pretty hard at some point. You might win a few. Hope you do, man, but it is not the way, it's not a long game.
No, no, and you kind of nailed it there. It's, people always complain about how they missed out on that big move and the opportunity was there. They knew the earnings was going to be good. And then the stock was up 40% on earnings. It's like, yeah, but The problem is if the earnings were bad, it might have been down 40%. So
Right.
it's hindsight trading is always easier than trading ahead of the event. You have this inclination. But if you start putting on a bunch of trades that are risking large percentages of your account with a low probability of success just because you're trying to multiply your account by 10, 20x in a month, it's not going to happen for most. Some people it will. But that's not a repeatable strategy for almost
Yeah.
anybody out there.
Yeah,
I won't say
exactly.
nobody because you never know if Marty McFly gets his baseball almanac for
Yeah.
this
Ah,
and comes back. So, but like stuff like that can happen. But you know,
great
um,
stuff.
yeah, great stock.
Yeah,
But
right. There you go.
yeah, you get some good opportunities out there. I think Comcast is a good one for this week. It's not the same risk of an Nvidia, but it's got an interesting setup with more of a technical driven trade than having to focus on earnings announcements and non-farm payrolls. I can just say, okay, Comcast, not heavily correlated to anything. Let it do its thing and follow the model.
Yeah, well, hey man, appreciate you jumping on with us. Thanks for firing up the flux capacitor in the trading
Yeah,
toolbox and letting us see what it's kicking out for us. This is good stuff
absolutely.
to chew on. As always, these conversations are great, great trading setups that we're looking at, great advice and just kind of fundamental trading advice. So just really worthwhile. Keith, thank you so much for joining us this morning.
Thank you.